Dornbush download number 85. Andrew, Dan, Dornbush Partners. I've already said that once before. Good morning.
A few times.
Good morning. Strange times, Dan. You and I were just talking before what we're going to talk about Dornbush download. And one of the things...
following your lead, Andrew.
Following my lead. No pressure. And one of the things we're talking about is why is the share market as strong, and that's a relative concept because 12 months ago it was 20% higher, but at the moment, say compared to February, why is the share market as strong as it is? Like, it makes no sense.
Makes no sense. No.
Banks under pressure because we've got ANZ NAB, and we've mentioned that a few times, so we won't go into too much detail about that. The only thing I can put it down to is, well, two things. There's strength in resources, so you've got BHP back over $20, bit of interest in gold. I think the other thing, though, is it's more so just that there's nothing going on with cash at the moment. Macquarie came out yesterday and said there's at least two more interest rate cuts coming, maybe more. What's your take on it?
Do you think there's interest rate cuts coming? Oh, that's a struggle, isn't it? Everything's really up in the air in that regard at the moment, isn't it?
But everything's up in the air.
Everything's up in the air. I think the price of oil overseas, that's kicked the US along. Maybe that's dragged us along a little bit. But why has oil going up kicked the price of, kicked the US share market up when, that's a bit of a dampener on manufacturing, etc., etc.
Transportation.
So for want of a better phrase, everything seems a little bit arse about face at the moment, doesn't it? So.
It is. And so, as your trusted advisors, I mean, I've got a client that wants to spend some money at the moment, no money in the market at all, happy to buy for them because we know it's 20% below where it was. But for clients who are sort of already there, pretty well set, got a little bit of money, I'm just sort of going, well, and then we'll talk about a couple of floats next, so that you might want to look at those. But, could you bang the table and go, this is compelling today for existing clients? I'm not actually quite sure you could.
No, I'd probably just about close to banging the table and saying, hey, we're at the top of that range again. Yeah. Perhaps it's time to sell out of something.
And that's exactly right. So if you're a trading client, we've seen the range this year has been sort of 4,700 for the All Ords up to about 5,200, as Dan's saying. We're smack bang on 52 again.
That 49 area seems a better support though, Andrew. So.
Well, Brendan, the star from Dornbush Download last week, and thanks for all your comments, Brendan's mum in particular, thank you. That's my boy.
Be nice if she sent cake though.
Yeah, it's letting us down on the morning tea front. But in all seriousness, like if you're having a look at the work that Brendan does technically, he's saying what you're saying. Sort of 49.50 is probably the mark. So trading in that range. The problem is though that if you're doing trading, that's great for us, keeps Mrs. Marks and Mrs. Violence in lives to which they've become accustomed. But from a client point of view, is that really is that a long-term wealth generating thing?
No. I suppose my thoughts at the moment are we going to see a similar outcome to 2015, Andrew, where we had that rally up into May, and then for the rest of the year the share market fell away? And, we're starting to read a few things. The chartists you subscribe to saying those sort of things.
Oh, and it's the old maxim, sell in May and go away.
Yep.
We're coming to US profit reporting season. There's lots of reasons the US share market shouldn't be at 18,000 points. We could spend the next half an hour talking about that stuff. So what we're saying to people is just be cautious is probably the term we'd use. Now, let's talk about these upcoming floats, though, because I think that's probably a little bit different relating to clients who are sort of, are fully invested. So one that we're doing is called WAM Leaders, and you spoke a little bit about that a couple of downloads ago when Jeff Wilson was here in the office. That was a bit of a coup getting Jeff here, and Kate Thornley, the CEO. So basically, for those who didn't watch, you can either go back and watch it on our YouTube channel, or it's basically a listed investment company. It's going to pay. Did they give a dividend range?
It might have been about 4.5.
Yeah. So first year it won't pay any dividend because they've actually to generate some profits. Year two onwards, it'll be around the 4.5-5% fully.
It's got it in that growth space, though, Andrew. That's I think the exciting part about it, and he's done a pretty good job when you look at his other funds in that area.
WAM, WAX.
Yeah.
There's 3 WAM funds. They've all done incredibly well so far. I met with Chris and Matt, who are the portfolio managers in Sydney, about 3 weeks ago. They're very switched on guys. So good, strong team around them. So yeah, look, I'm happy to look at that for clients. And the other one is a poultry float. Tegel, which is one of the largest poultry, I was going to say manufacturers, you don't manufacture poultry, but one of the largest poultry processors in New Zealand. And they'll be paying around a 4.5% to 5% unfranked dividend because it's out of New Zealand. But the PE is pretty undemanding at around 13 times, and that earnings growth is forecast to be around 20%, which is pretty attractive. So if you're looking for a prospectus, a PDS on either one of those, have a chat to one of the guys here. We can help you out. Both of those look interesting, but yeah, from an overall market point of view, and I think you summed it up really well, we're just uncertain. And
yes.
I think we'll get a better feel for it once bank profit reporting season's out the way in a couple of weeks' time.
Very good.
Otherwise, Dornbush download 85, I think that is a wrap. See you next week.
See ya.